no, there will be no alt season. There are more than 36 million coins right now. In 2017, there were less than 1,300. How could there be another altcoin season with that many tokens? I'm going to answer that exact question in this video, but first, what I'm about to show you is a little overdue. This might be one of the most important altcoin season videos that you will see this entire cycle, at least on my channel. It is not hype. It is not some type of top 5 altcoins to buy right now. It's not an echo chamber. This is altcoins relating to the data, the liquidity, the business cycle, the dominance, the supply demand dynamics that are happening right now, all of it laid out for you so you can understand where we actually are in this macro environment and what it means for altcoins moving forward. Before we get into all of this macro stuff, the PMI, the liquidity, the charts, Bitcoin dominance, all of it, there's something I want to address really quickly. It's a narrative I keep seeing pop up all over the place. Hit the subscribe and like on the way in. And if you're not in our intelligence system right now, click the link below, get signed up for a free trial, test out our risk models, set up your exit strategies, start planning accumulation if you need to. Whatever you need to do, make unemotional, risk data-driven decisions for this cycle. So first, to start this video, there is this thesis going around that there will be no alt season this cycle. And here's the claim that a lot of people are making right now. Here's a post on X. No, there will be no alt season. Why? In 2017, there was less than 1,300 cryptos. In 2021, less than 100,000. Today, it's more than 36 million. Now, this argument is everywhere. Millions of coins, liquidity dilution, therefore no alt season. And I think it's just important I address this before we really dive into altcoin season data, because I do want to show how misleading that whole narrative is. There's someone on X I saw that actually replied to that post with actual data. James Bull over here on X. Here's what he said. This is false. In 2017, there were 1,300 cryptos with more than $1 million in daily volume. Now, in 2025, there are also only 1,300 cryptos with more than $1 million in volume. And once you go to 2,000 cryptos, it's already less than $200,000 daily volume. Every crypto after that is irrelevant and has no mind share or doesn't extract any capital. So this is exactly the point. It is the main point to highlight. There aren't millions of tokens competing for liquidity right now. The mass majority of them have no relevance. There are about 1,300 to 2,000 liquid assets that actually matter. And that's almost the same as previous cycles. So yeah, you always have noise. We have insane amount of tokens just coming online nonstop all the time, but it almost means nothing. But that's the whole point. You can have as many copy-paste tokens as you want, but alt season has never been defined by the number of tickers that are out there. What's it been defined by? It's been defined by liquidity, macro conditions, and investor behavior. That's the thing that a lot of people are not focusing on. And that leads directly into what this video is actually about. The data shows that where we are right now in the cycle and what might be coming is something that we have to pay attention to right now. Let's start with this post from Wyckoff Architect. I want to literally read this post because it captures something incredibly important. If you thought the 2023 Q1 2024 rally was an alt season, you've seen nothing yet. That move happened during quantitative tightening. Imagine what happens in a quantitative easing environment when interest rates drop, liquidity flows, and investors go risk on. That's when high-risk assets like crypto go absolutely wild. The next environment will fuel a rally that could be 5 times stronger than what we saw in 2023, 2024. That's when we'll see a true alt season because conditions will finally be right for it. Now, that's exactly the point. People think the alt season already happened and it was very underwhelming, and I guess everything else is canceled as far as a really bullish move goes. But everything we've seen so far, everything has happened under quantitative tightening, high interest rates, balance sheet shrinkage. And for those reasons, that's why the next part of this video matters so much, because now we can talk about the actual macro setup. Here's a recent post on X. $7 trillion is now sitting in US money market funds, a record high. Let me say that again. $7 trillion sitting on the sidelines, waiting. Total assets, $7.52 trillion. Retail loans, over $3 trillion. Institutional, over $4.48 trillion. Record highs in retail money market funds. So ask yourself this. If the Fed cuts rates, even small ones, where does a portion of that money go? Where did it go historically? It flows down the risk curve. That's what it does. It hits equities, of course. It hits small caps. It hits tech. It hits crypto. And that brings us to the macro timing that matters most right now. Please look at this chart carefully. This is one of the most important charts I track. Look at the red box, quantitative tightening. Now look where we've been consolidating for 2.5 years. inside the quantitative tightening box. And right here on the screen, I have it labeled very clearly. Quantitative tightening ends in December. This is the exact moment I've been talking about, when the business cycle and liquidity cycle begin turning together. Now, this is important. QT ending doesn't all of a sudden pump crypto overnight. I say this a lot. It's not like crypto's going to pump on December 2nd, but it does something far more important. It signals that the direction of liquidity is changing. And it really doesn't even matter how you spin any type of bullish or bearish narrative that is out there. This is just the liquidity cycle. And historically, altcoins respond very bullishly to the shift that is getting ready to happen. Here's another chart that is also crazy. Every major altcoin breakout, every single one, lines up with PMI leaving contraction and beginning to expand. And right now, PMI has been contracting for years and is bottoming. It's flat. It's sitting at the exact zone where previous cycles flipped right into expansion. You can literally see the rhythm. PMI contraction, altcoin consolidation. PMI expansion, altcoin breakout. I really cannot just highlight this enough right now. I know my opinion is bullish. I'm bullish. That's just my sentiment right now. But what I'm showing you right now in terms of data, in terms of these charts, that's not opinion. This is just what has happened. It's very clear on the charts. When we go into expansion on this PMI chart, we see a crypto bull market. So if we are getting ready to go into expansion, don't you think it's fair to, at the very least, prepare for a potential altcoin move, since that is what has happened historically? I always tell you, I do not know what is going to happen because I don't. I always tell you it could all go to zero because it could. There's always this risk management game that goes on right now. I'm just trying to very clearly illustrate and present to you the data on why I'm just bullish. And again, why I think it's more risky not to be in the market than to be in the market. So right now we are sitting on that same boundary yet again when it comes to business cycles. So now let's really get into the weeds here in terms of altcoins and Bitcoin dominance. Here's something people forget. Altcoin seasons never happen when Bitcoin dominance is in the middle of this very strong uptrend. They happen at tops. That's when they begin, during distribution or when dominance rolls over after major macro turning points. Look at what happened when QT ended last cycle. Bitcoin dominance peaked and then fell for more than a year. Now look at where dominance is sitting right now. Almost the same zone, same macro backdrop happening right now, same liquidity transition happening right now. And before I bring all of this together, I want to bring something up that ties directly into what we're seeing right now. Back in May 2025, I recorded a video called Altcoins Officially Less Risky Than Bitcoin. And since then, Bitcoin dominance has already dropped from about 63% to 59% as I record this video, which is exactly the divergence that we were starting to see back then in May. That thesis was not emotional. It came straight from our CCV intelligence risk models, which were showing Bitcoin sitting at higher long-term risk score while multiple altcoins were sitting deeper in their historical low-risk zones. At the time of recording that video, the one thing I did not really have a gauge on was, when is the business cycle going to turn? Because that was in May of 2025. Now we know quantitative tightening is getting ready to end in just around 1 week from today. And we are now finally about to enter a more favorable business cycle. And that same pattern is strengthening that has strengthened before for altcoins. The macro turn, the liquidity shift, and the risk models are all pointing to the same thing. Altcoins are entering a setup where their risk-adjusted upside simply looks better than Bitcoin's, just like we've seen at every major cycle transition. And I just want to highlight to you, risk does not equal price. So if we've seen certain altcoin prices not compete as strongly with Bitcoin, remember, risk and price are different. This is a macro transition, a macro risk thesis that I'm tracking right now. Here's the simplest way to say all of this. Liquidity is bottoming. Look at the screen. Quantitative tightening is ending. $7 trillion in money markets is sitting idle. Bitcoin dominance is at the historical turning zone. Altcoins have been suppressed under quantitative tightening, and the real environment that fuels alt seasons hasn't even started yet. Lower rates, increasing liquidity, risk on behavior. This is not a prediction video. This is just data that I want to present to you. This is the macro map. And across these cycles, when you bring all of this data together, I think this map is becoming pretty clear. And as always, everybody, nobody knows what's going to happen next. I'm just trying to present to you my opinion. I'm trying to back it up at the very least with data that I'm seeing. But again, we can only prepare for every scenario. That is best case scenarios, worst case scenarios, and we have to manage our risks in our own unique positions that we are in. I really appreciate you watching. Hit the subscribe on the way out. And again, if you're not in our intelligence system, please click the link in the pinned comment below. Get set up with a free trial. Give us a shot and start trying out our risk models that we have for a bunch of different assets back there. Start planning if you're a macro investor. I appreciate all of you watching. I'll see you in the next video. God bless.